It broke the high, you didn't hesitate, it looked perfect. You entered right after the break of structure, thinking this was finally the move. But then price reversed fast, stopped you out again. You followed structure, so why does this keep happening? This is the trap. Price looks like it broke the high, and you think the move started. But that break, it's bait. The real smart money move happens after the pullback, and the lower time frame shows exactly when the pullback begins. Most traders buy right after the break and get stopped out. This trap kept me stuck for months. I thought a break meant go, but it's only a warning. The first fix is learning smart money structure. It's how you read the full move, not just the break. If you're tired of losing after a break, this is the shift you need. In this video, I'll show you that first fix, and soon I'll share the full 2 time frame method that stops the trap completely. If you already know structure, but trades like this still go wrong, the workshop shows you why. That's where Jake stopped second guessing and started getting in clean. It's £49 and it's where things finally clicked. Just hit the link below to join. So once mastered, you will be able to understand exactly why you lose with a break of structure. But first we need to understand this smart money structure technique. I'm going to go through a bullish move in the market using this technique, then followed by a bearish move. It's very simple to follow. I'm going to give you a simple method to go away and apply to your charts and start marking up your structure yourself so you can see how easy this is done. So when it comes to smart money structure, this is a very simple layout I've got in front of you. Now I can tell you straight away, the charts will not look like this when you go to a price chart. You're going to find a lot more price action. You're going to find it very choppy, and you can find it very hard to find that trend unless you understand this smart money structure first. Smart money structure, what we need to see and understand is the break of structure. So the break of structure is going to come when we see price pushing through a previous pivot high. So we have this high created on this bullish move to the upside. Once we see price pulling back, it makes a higher low and we push through to the upside. Now, for the valid break of structure, and this is key, we need to see a full body candle close through this level. Now, as you can see, this is exactly what we get. This candle you can see here has to occur with a body close to show you it's a valid break of structure. Now, when it comes to the trap that we went through the first part of this video, many of you are sitting there thinking this is now the point where you're going to buy this market and the price is going to continue to go to the upside. And that's where you're getting caught in this trap. I understand by using smart money structure first is to identify where you are with your trend, using multiple time frames, and then you'll be able to see where price is actually going to come back to for entry. So make sure you watch the rest of this video so you understand the idea of using smart money structure. Then watch the next video at the end, which goes through the actual trap itself and will teach you how to avoid that break of structure trap. So let's now understand what is happening. Once you have this classed as your break of structure, and remember BOS is basically what stands for that break of structure. This is our identified bullish move. Once this happens, we're going to use a technique now with a candle by candle approach to find what we class as a valid high and a valid low in a bullish trend. Now, for a valid low in the market, what you're looking for is from the breakout point, you're going to look back on those candles and you're looking for the first time you see a candle closing down. Now, what I mean is when we see this candle here closing down below this candle's low. Now, I'm going to mark it off with an arrow. This candle must close below the previous candle's low, and that does do this. Once you have this, and this is after the break of structure, you look for this in a bullish trend. You can now mark this low as your valid low in the market. And what you'll class this as is a strong low. Now, it's a strong low because it's where we see the market holding and continues to push and break structure. Now, it's here where we look for price to actually come back into that area for taking a buy, where you're potentially looking to take a buy at the break of structure itself. Now, the same process is used when we look for the valid high. Just like we got the valid low created, as price has made that breaker structure, you're looking for the same sequence. You want to see price closing down below the previous candle's low. Now, it happens on this next candle. So we have the break to the upside, we have a pause with a bearish candle, the next candle closes down and closes below the low of this candle. That gives me a valid high I can now mark. So now we can mark off this high as a valid high. So we class this as our weak high in the market. Now it's a weak high where we look for price to want to eventually run a new breaker structure with that bullish trend. So that is how we look at a bullish trend with the smart money structure. It's very, very simple. You're looking for that pivot high to be created. Now the reason this is actually a valid breaker structure, because where we see this candle closing down, just like we see here, it created that weak high. This was a weak high. So it's a valid break of structure. We look down for the last time we see that candle closing below a previous candle's low. Now it must be below the previous candle before it. It cannot be like looking at this candle here, we see it close down. We must see the candle before it, and that's the low we use to be closed below. Now we see the bullish move breaking up. We look for the same sequence to create a valid high. Once you have this valid high created, when we see the close down, this gives you your current trading range. And this is important because once you understand your trading range you're inside, now you know where you're looking for potential trades. You're not buying this breakout point, you're waiting for that pullback. And you're going to see all of this in the next video coming up after this one, which teaches you the full trap, how to avoid it, and how you can also use the 2 time frames. So once you understand the bullish trend, let's now look at the bearish trend and how we look at this. Now it's slightly different, a very similar technique, but just slightly different. So as we see here with this breaker structure, we see the market pushing down, okay, making that move to downside, and we create a pullback. So this is a low that we're going to create a breaker structure at. Now I'll go through exactly why it's a valid breaker structure in a moment. So we mark this off as a valid breaker structure. Now, just like we see over here, we're looking for a valid high and low, and obviously this valid breaker structure. And the way we do this now is instead of looking for that candle to close down, we're looking for a candle to close up. So just like we can identify from this high, this candle closes above the previous candle's high. Where we saw before, the candle must close below the previous candle's low. So once we identify this candle's close, it gives me a valid low here I can mark. That's why it becomes a valid breaker structure. Now, why is it a valid breaker structure as well? If you remember what creates a valid breaker structure, drop that down in the comments and let's see how many of you actually get this right. Done that? Great. So the valid breaker structure is in fact the candle body closing through the low of that breaker structure. Now remember, we're marking off the low of the wick and we're looking for a candle close through that level. So now we have a valid breaker structure to the downside. We can look back to the last close up, which is this level on this candle, and we can mark off the high here, and we can mark this across as a valid high in the market. Now, what does this make? This makes a strong high in this situation because we're now in a bearish market. Where we had a strong low, we're in a bullish market. In a bearish market, we're going to create a strong high. Now, where before potentially you're looking at taking an entry on the break of this breaker structure to sell the market, that's where you're getting caught in that trap. Instead of this, you should be waiting for that pullback phase. And this is how the smart money structure is going to help you do this. Now, once we have this breaker structure, we're looking for that valid low to be created. Now, what creates a valid low is exactly the same as what creates that valid high. And we're looking for that candle to close above the previous candle's high. And that's exactly what this candle does. That's why I've marked it off with an arrow. We close above this previous candle's high. Now, once we have this, it gives us that valid low we can mark in the market. And we can mark it across And hopefully you already guessed what this is going to be. It's going to be your week low. That's your week low in the market because you're expecting price to pull back into your range, your actual trading range, to continue down to break that low once again for another breakout structure. But this is the process when we're looking at a bearish trend. For a valid area, we're looking for a close above the previous candle. Okay, and we're looking for a valid break with a close through that level. And again, for a valid low, you're looking for a close above again for a valid low. Just the opposite of what you see in the bullish market. And that's why it works once you understand this candle by candle smart money structure. It is very mechanical. It's going to help you to quickly identify your levels and your breakout structures, your trading ranges. And once you understand how to apply it with 2 time frames, this is where it changes everything for you. Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description and apply for early access to the 90-day profit trading system today. So let's quickly recap this video. In a bullish market, we're looking for continuation bullish, looking for a breaker structure to occur to the upside, must be a body candle close. Once you've seen that body candle closing through that level, you look back for the last close down, which is this candle, to create your valid low. Now for a valid high, you're looking for the close down again to create your valid high. Now when you're marking off your high, it's the highest point from the pullback. When you're marking off your low, it's the lowest point at the candle that closed down. So if we saw this bullish candle have a lower low, you would simply mark this from the low of that bullish candle for the low. Again, when we're looking at the bearish market, we're just looking for that candle to push down, price to move lower, pull back to create the lower high, new breakout structure. And again, when you're looking for the pullback phase to create a valid breakout structure, you need to see that candle closing above the previous candle's high. Then looking for a valid breakout structure with a body candle close through that level. And then you're looking for another close back up above the previous candle's high to create your valid low. And that gives you your current bullish and bearish trends using the smart money structure. Now watch this next video coming up. It goes through the full trap of the breakout structure, what potentially you're doing and what you need to do to fix it, and how you can apply 2 time frames to quickly avoid these traps.